Alright traders, I am back again with another video, and in this video I'm going to do a little bit different. I've done this before, but we're going to do it again because we hold our member session, which we call the Live at 5, Ichimoku Live at 5. So some sessions we'll talk at 5 o'clock, we'll talk about Forex, and then other sessions we'll talk about cryptocurrencies. We'll be expanding more to stocks and options, and we're going to trade everything. So because we have traders that want to do everything and trade everything, so we're going to have the ability to be able to look at different assets and not just look at Forex or cryptocurrencies. We'll throw in a lot of stocks there. So I used to trade stocks, but just got boring because you got to wait for stocks a lot, and love the Forex market because it's 24/7. So I wanted something that was moving more. And by the time I had a chance to get into my trade, usually had a big gap up or down, and I didn't get the exact position I wanted. So I just got away from stocks. But you know, a lot of the concepts still apply. So what we did, we have our member session, as I said, and we were looking at cryptocurrencies yesterday. So I'm going to take a clip from the cryptocurrency session we had. But before I do, I'm going to tell you what we were looking at. We were looking at this Ethereum Classic, right? So when we looked at it, I didn't really have my levels in or anything, so I drew the levels in as we watched, and then I showed the concept of just trading support and resistance in a ranging market. This could be a ranging market because the range could be this lower level here, up here, then come all the way back, hit up here, and then we're back down. Maybe the market reaches back up here again. So this, these cryptos are basically the data's, you don't have a lot of data, all right? So when you go back, even if you take this thing back to 2016, basically, yeah, so 2016, somewhere in there, this is where this Ethereum Classic started tracking. So you're looking at 2 years of tracking, so you don't have a lot of data. And if you don't have enough data, sometimes you don't have enough support and resistance levels and things to rely on, because you like to see the same things happen in the market. You like to see levels that the market honors, or you like to see formations or setups that the market honors, that certain market honors. And if you don't have enough data, then sometimes it's hard to see that. But here we're starting to get enough data because the market's pulling back into levels that it's been before. So on the move higher, there was levels that it hasn't been before, but as it pulls back down, you could see there's levels where we've been before. So now we start looking at these levels, see how relevant they are. So what I did, I made this lower level into a zone because we have this support level right here at 9.699, and then you have this level here where you could see it was a lot of support at this point, a lot of support, and then it was some resistance. So you want to see a line that really has support and resistance level. So this is pretty much a big zone, and then you could see that level we have. So that's going to be at 13,580, and then the market moved higher. This is where we didn't have a lot of data, and then we flattened out. You could see we kind of made like I won't really call this a double top, but a lot of traders will. So it looks like a level where we hit twice. All right, so that market pulled back, came back, hit this level again. So we got it at 38.9 and 43.0, right on the nose. So these levels, this is a nice support, a nice resistance zone, and then you see the market drop. So it looks like the market's starting to do this, getting to this area where it's going to start doing this. Maybe this is going to be a ranging market, right? So it's inside this box right here. So if it stays in that box and follows this level, then we may see the market move up to here eventually. So therefore, maybe this asset is starting to line out and show itself. Okay, so with that, we could get a possibility for a move to the upside. Now, let me show you what I looked at, and then I'm going to go and take you back to the clip that we looked at yesterday. Let me remove this. So what I was talking about yesterday, when this was where price was yesterday, right here, this was the candle. And at 5 o'clock we were in our session. This candle closed at 7, and then you could see we were talking about this market moving back to the upside off of this support level. Now I thought we might be able to see it come back a little bit closer here before it started to move to the upside, but I wanted traders to be prepared because we could see the move to the upside. With the move to the upside, the reason is because we're getting too far away from Kijinsen here, and it's flattening out. The market likes to be in equilibrium. This is not equilibrium. This is where the market is getting too far from Kijinsen. You're going to see it start to pull back and get closer up to this level here. All right, so if it's going to be a ranging market, there's a possibility like it could pull all the way back up here. So one thing I trade the bounce off of the Tinkinson level. And when I see that bounce off of Tinkinson level, especially like this, I look for a trade to the downside. Now, I'm not really looking at that because of the way we have this support and resistance level, the bounce, but we got a big gap here. So this gap here with Tinkinson and Kijinson, you don't see that. When you see a gap like that, you're going to see the market pull back normally. So here was a slight gap here, and then the market moved higher because the market was dropping to the downside. You had a gap here. You're not going to see too many gaps because we don't have a lot of data here. But then you see this one. This is probably the biggest gap that this pair has seen. So this asset hasn't seen a gap like this, I don't believe. But you see your Kijinson flattening out. When that flattens out and you got that distance, look for the pullback. A lot of times we look for a C clamp. This isn't a C clamp, but when you see a big C clamp, definitely know the market's pulling back, especially when you get it off of the bounce of a support level. Now, I love the bounce off of the support level and the distance on Kijinson. That lets me know that the market's going to possibly pull back. All right. So I also looked at this. I used the ultimate oscillator here. I'm looking for divergence. I want to see if there's any divergence. So at the point, there wasn't any divergence per se for showing me bullish divergence. So I really didn't have any of that. Then I went down to the 4-hour time frame, and I'm going to go back and show you the clip that we took. So the market was in a move to the downside. Here, a lot of times we look for a bounce off of the top of the Kijinson, but you had a crossover that happened here, and then you violated some levels that we look at, and then the market went higher. Now I'm still worried about some levels. We need to break some other levels before I can really say the market is going to get into that full swing based on the 4-hour time frame. So if I mark this level, that's the top of the cloud, flat cloud. Now let's go back to the daily and see where we look at what that looks like. So that's some good distance if we could get to that point, right? That's some good distance, and then we may see the market pull back a little, and then maybe attack again, move closer to the flat Kijinson, and then maybe pull back and eventually get to this level. So we really don't know what the market's going to do, but where we were yesterday was a good opportunity for us to get into the market, and some of my traders did get into this asset. I don't know. Just got to look at right now with this, the way it's flattening out and lining out. I'm not really paying a lot of attention to like the things that I'm seeing with Ichimoku, because in this environment, Ichimoku's not so great, but still the things apply as far as getting distance on Kijinson. You don't want that distance, okay? But as far as me looking at this saying, hey, I got a Tinkinson bounce and I can get a trade to the downside, I don't really love that, and I don't love any of the other signals either. So there's other things that we look at besides that. Look at support and resistance, look at the price action. Fractals are a major asset that we look at, and then we go from there. All right. So let's go back, look at what we saw yesterday. We were looking at the Ethereum Classic in our session. So I'm going to take you guys back, let you have a look at the session. This is a session that we hold a couple times a week. You know, it's called the Ichimoku Live at 5. It'll be Forex, as I said, and sometime cryptos, and we're going to expand, much like I said. So I'm going to post this up here so you guys can see it. So let's go to that session that we had yesterday and see what you guys think about that. But you know what? I'm going to say goodbye now because I won't be back again because it's going to be a recording, okay? So till next time, have a great one. Enjoy what I'm going to show you next. God bless. Be right back. So if you're looking for to catch this back to the upside, not yet. All right. So that's it with that. Let's go to the Classic, the Ethereum Classic. Again, another pair that, first of all, it's overextended. It's getting a little bit of distance on Kijinson. It's overextended because it's getting farther away from both of these indicators, the Tinkinson and Kijinson. So when it's getting overextended, I look for it to eventually come back. So it will come back to the upside. So I want to mark levels first, see where levels are. So there's one level. And then the rest of the levels are kind of tough because the market was so flat right here. but there's some that I could look at. So what I'm going to look at, I want to find levels where it was support and resistance. So it looks like, see, it was support here. This was all support right here, and then it dropped below that, and this was resistance at that level. And then it found a tiny support there. So I believe you may see this market still drop to this point now. It's getting some distance, and it failed to break below these, above these fractals. It hasn't really closed above. When I'm telling you it's getting distance, it's going to eventually move back to the upside, and you're going to see this range, and it's going to reach back up to here eventually, probably, but you're going to see it range, and it's getting flat. So it has to find this level. When it finds this level, it's going to move higher because it's too far from Kijinsen. This is going to move higher, unless it just stays down here and ranges. Eventually, Kijinsen will catch up. So if we're looking for this to move higher, then what I look for, this thing is pulling back off of this level. There's nothing yet. So we haven't really had a first fractal break. I would look for the first fractal break on the 4-hour time frame. Now, if price comes back down to here, look for the same thing you got here. And this is your inverted hammer. All right. So price may come back and violate this fractal. Watch for it to bounce off of this level. And if not, it's going to come back to this area because you're going to be inside this zone. So I don't like the trade to the upside yet, but I think there's going to be a possibility because I like that we're getting distance on Kijinsen, which shows me that, yeah, this is going to come back to the upside. So I like that. So if I'm patient, I can catch that. So you'll catch that, and I'll keep an eye on it, and just keep an eye on it yourself. So Gary says, I have been using all your teachings to trade my stock account. All your stuff works great with stocks. Your membership paid for itself the first day I checked my stocks. The courses have helped to keep me my stock accounts moving up. I was up 26% for 2017. The more I learn from you, the more money I make. Thank you for your help. So yeah, I didn't tell him to say that or say that, but Gary, I appreciate that. Yes, if you follow the directions, I mean the rules and stuff, then everything does have the ability to work for you. And as you see, it's working for him, and it's working for me, and it's working for quite a lot of other people. So I think the things that I do is pretty simple and basic, but it's just that a lot of traders don't pay attention to the same things. And if you they think that you have to overcomplicate stuff. You have to have more indicators. You have to have more of this. You have to have this and that. I always tell traders, the whole thing about trading is the mentality. So you're looking for that holy grail. What's going to make you win trades? You're going to make yourself win trades. It doesn't matter what system I give you. If we all have the same system, trade the same thing, we're all going to have different results because people are going to do different things that they shouldn't do or should do. So you always have different results. And then one thing I never like people to ask me, what is my winning percentage? Well, what if I tell you what my winning percentage is for this past month? It's like almost 90% for the past month. Well, you got to know more than that. How many trades did I make? So this past month, I made 7 or 8 trades. I made 8 trades. All right. And then, okay, he's 90%. So he's a 90% trader. No, if you go farther down, well, then maybe after 6 months, I'm a 70% trader. Okay. So then maybe if you go a year down, I'm a 50% trader. But then maybe if you go 3 months, I'm maybe a 65% trader, right? So you can't go by that. You can't go by because 1 month I could be 100%. The next month I could be 50. Then the next month I might be different. And then overall you'll say he's that. So you can't do that. Look at how many winning percentage it is. Just look at, is the person profitable? Period. It doesn't matter about the winning percentage. The winning percentage could be 50% and you'll be a good trader. If you're 50%, you're a really good trader. All right. I mean, really good. But you could be 50% and be a terrible trader because the thing that's going to make it is your money management. All right. Say this stuff all the time. So we got that Ethereum Classic, looking for the fractal break on the 4-hour, or else if the market pulls back to this level, looking for price action entry. Daily time frame, you can see we're getting too much distance. So yes, we're going to start looking for the move higher. Keep your eye on that pair. All right, so I'm going to move a little quicker because, again, you guys are stopping me from the gym. I'm going to have to do these things earlier, but it's always the live at 5. That's what it's called, and that's when a lot of people are home. So
I have to do it like that.